When more and more individuals say to the financial services industry, you know what, I don't want to pay you a fee to lose money, then the institutions will change. Right now, they sell the easiest thing to sell. And the easiest thing to sell is the supposed safety of fixed income obligations. The truth is that investors want income. Increasingly, the investing public, that part of the investing public that has money, is old. And those people want income. And they think, unfortunately, that what they want is relevant. What's relevant is what you can have. There is lots of income around there in passbook savings deposits, as an example, that yield you 25 basis points. But getting paid 25 basis points in a world where your currency is depreciating by 6.5% is obviously problematic. What investors haven't gotten around to figuring out yet is that even by taking the credit risk associated with the high yield bond index, or some of these leveraged mortgage funds that are yielding 4.5% or 5%, that even taking credit risk, they aren't keeping pace with inflation. Understand, too, in some of these leveraged mortgage funds, Dunnigan, what the investor doesn't understand is the way that they're getting this 5.5% yield is that they are buying 30-year 3.4% mortgages, and they're funding it, or the fund manager is, by borrowing money in the money market, in the overnights. In other words, they're borrowing 90-day money to finance 30-year money. If the short-term interest rate goes up, or that credit becomes unavailable, the yield on those instruments goes sub-zero. The first thing that has to happen probably is that one of the big leveraged mortgage REITs has to go upside down. There has to be some circumstance where the time spread, which is to say the carry trade involved in borrowing short and lending long, causes people pain. I think as soon as that happens, that the behavior changes very, very, very rapidly. Dunnigan, as I think you know, I'm part of starting up a new bank, really the seventh of my career. And one of the reasons I'm doing this is because every time I ask investors if they're happy with their existing banking relationship, every single time the answer is no. And every time I talk to a sophisticated depositor and I say, how do you feel about the fact that these lending institutions are borrowing money in the overnight market and lending it for 30 years and living on the time spread? Does that make you feel comfortable? And they say it makes you terrified. Now, I maybe pay better attention to this than other people, but the fact that the circumstance is so dire that a 68-year-old who's allegedly in retirement is starting a new bank tells you that behaviors are and will change. I just can't tell you when. What would cause me to sell gold or silver? Is that the question? When the circumstances behind the reason that I think it's going to go up change. So let's examine those reasons. We've done this before on your show, but I know that your viewers cycle. The first reason why I believe precious metals are going to go up, and understand that the principal reason, in my experience, why precious metals prices escalate is because investors and savers are concerned about the purchasing power of other savings and investment instruments, particularly those denominated in fiat currencies. So let's figure out why people might be afraid. The first is quantitative easing. We've talked about this before. Quantitative easing, the fact that 35% of the dollars in circulation have come into existence in the last 2.5 years. Quantitative easing is counterfeiting. It isn't like the economy's grown by 35%. We didn't need to accommodate an increased float of currency because of increased economic activity. We did it by creating more specious currency units. This is counterfeiting, and increasing the supply of something, in particular the spurious supply of something, lowers its unit value. Pretty obvious. The second is more pernicious, even more pernicious, pardon me. That's debt and deficits. Even now, the government concedes that the federal debt isn't going to be paid. It's going to be rolled over. And the numbers are alarming. The on-balance sheet liabilities of the U.S. government are almost $30 trillion. $22 trillion net of the Fed's own counterfeited balance sheet. But the off-balance sheet liabilities exceed $120 trillion. So the federal government, not state and local governments, the federal government owes $140 trillion. And they propose to pay this debt with a budget that's $3 trillion in deficit. In other words, rather than pay it down, they're going to increase it by $3 trillion a year, at least. compounded over time. This presents a credit risk, which nobody talks about, but it certainly causes other risks in terms of the stability of the currency. The third, and probably from a saver's point of view, the scariest is negative real interest rates. If you buy the world's premier savings instrument, which is the U.S. 10-year Treasury, the deepest and most liquid security in the world, the arithmetic works like this. The government pays you about 1.6% currently a year for 10 years. Absolutely positively, this is going to happen because remember, they can counterfeit. They can print what they pay you back. But they pay you back in a currency that's losing its purchasing power by their estimates at 6.5% a year, which is to say they almost certainly guarantee you about a 5% compounded loss. In other words, they guarantee to scrape off 5% of the purchasing power of your savings every year for 10 years. Our mutual friend Jim Grant calls this return-free risk. So gold is competing with return-free risk. But the most important points, I call it point 4, but there's actually 2 points we've sort of covered. The first is that the market share of precious metals is at a historic low point, even though all the attributes around precious metals are positive. We're acting on information that we've been taught over the last 40 years and ignoring a sea change that's occurring in the market. And that sea change will be most applicable to the institutional investors that we talked about before. That 40% of investment assets held by the biggest institutional investors in the world, TIA CREF, the Stanford University Endowment, Norges Bank, the biggest institutional investors in the world have bond portfolios that they're looking to for stability. And the only thing that's stable now is the losses that they're sustaining on their bonds. As these institutions are forced to disintermediate out of long bonds to protect the savings, the lifestyle of their pension obligations, or the maintenance of Stanford University, or the future well-being of citizens in a sovereign wealth fund, the disintermediation out of bonds because of negative real interest rates is the thing that's going to propel gold and silver. So when would I sell my gold and silver? When those conditions changed, when governments stop counterfeiting, when federal, state, and local budgets are balanced, or at least when the accumulated deficit is less than the rate of economic growth. When negative real interest rates are over. In other words, when there's a positive yield in the U.S. 10-year Treasury. And when the market share of precious metals relative to other asset classes at least goes back to its 30-year mean, that is to say above 1.5%. Until those factors have changed, I'm staying long.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, You won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.